No, of course not, because what's growing also is a value. But I'd just like to address the question about where we are in the market at this level and whether we're going to push through. And just briefly, remember, we are exactly where we are January 29th of this year. So we started the year, there were expectations that were much lower than what they are now. The S&P estimates for the year, for the 500, were about 147. They're now 160 for 2018. So we have a much broader and deeper looking runway for the rest of the year at the same price. And that implies to me that there is room to grow, not just for growth or technology, but the market. As Pete said, industrials and financials and consumer stocks have done well this month also.
There's no doubt, Joe. I mean, it's a more broad rally than just the marquee names of the FANG stocks. But there's really no debating the fact that growth has taken over once again. Just at the moment where, value investors were saying, is this going to be our moment in the sun? Maybe the tech stocks, some of them got ahead over their skis a bit, and now they're coming back to earth. And the recent market activity would say, once again, wrong.
Well, I think a large consequence of that is what Apple has done in the last week, and that's been a significant contribution. Now, you can make the argument Apple's growth and Apple is value, right? It's a little bit of both. But I think also, too, energy has pulled back significantly.
Energy's down 2.5% on the month. Apple's up 10% on the month.
So energy is pulling back significantly. I don't think any of us expected value to outperform growth. I don't think that was the argument. I think, to your point, it is more of a broad-based rally, more participation from healthcare, more participation from financials, and I think that overall is a good indication for the market. But no, let's not think that value is going to outperform growth.
Hey, look,
earnings are there to support it.
There was a good amount of conversation that the fallback of some of those techs post-Facebook earnings, right? Netflix pulled back, and some of those more cyclical sectors had taken the lead. Maybe some of those value stocks were actually going to come back in favor. But the moment in the sun.
The larger market cap companies led technology back higher. Apple, Microsoft, Amazon. Those are the mega caps. Those are the ones that we needed to deliver the earnings and the subsequent performance, and they did.
Yeah, but when the market seems vulnerable, that's when people talk about value. It's as if they say if the market comes down, it's going to be value that leads. It's going to be lower PE stocks that lead. But when the market is going up, it's really hard to make that case.
Now, we're going to be talking about $2,000 a share for Amazon in the not-too-distant future. Here's the performance, Doc, over the month to date. So, you're a week or so in. You've got Facebook up 7.5%, Amazon up 6%, Apple, we said, up 10%, Alphabet, Netflix up 3%, Microsoft, NVIDIA doing well. I mean, I go down the list. I keep going.
Well, and at the beginning of the year, we talked about when would it kick in for the consumer to start feeling that little extra in their pocket. And we talked whether or not that would be moderated by crude oil prices and thus distillates and so forth going up so dramatically this year. Certainly has been a headwind against the airlines. However, consumers, as soon as that first quarter ended, began spending pretty much right at the end of that first quarter, Judge. So you look at Macy's. Last 3 months, Macy's up 34%. Taking a look at the likes of Target, 18%. Luckily, I'm in that one. Coors up 18 or 22%, something like that.
You look at that versus the S&P. Yesterday was at a new high.
Yeah.
Right? So the sector has had this, I don't want to call it a stealth run because it's not like no one's focused on it. But again, all of the headlines are on these other parts, more sexy parts of the market.
And yet, this is what everybody around the desk talked about at the beginning of the year. Wait till the tax cuts start focusing or filtering in until the consumer is actually measured by retail spending, driving these things up. Take a look at TJ Maxx.
Yeah.
You can go across the board. A new high. This is a very positive thing, and that's one more sign that the economy has more room to the upside rather than it's topping out. There's no support for anything but the 5 or 4 FANG stocks.
Pete, the reemergence of tech certainly helps with the overall bullish bias of the market.
Yeah, no doubt.
You've got, I think in the Journal it was cited today, Credit Suisse says, call option buying on the S&P is picking up big
time. Turned into a bit of a freak show, yeah.
You wouldn't have that maybe if these tech stocks didn't put in the gains in a week or so that I just ran down the list.
Yeah, and I think the anticipation right now, why you're seeing that, for instance, in the spiders, so we're seeing some of the activity we are. By the way, extremely short term. I think that's really important for people to know. They're not going out in time, Scott, going all the way out to December or further out there. They are going right here, right now. As a matter of fact, some of the biggest trades that we've seen recently expire tomorrow in the spiders, and expecting, you know what, I think what they're planning or hoping for or looking for would be some kind of a breakout to new highs and explode through that. Once you break through, how much further do you actually jump once you break through those highs? That's what I think these guys are playing upon, and it's very inexpensive. We talk about that all the time about protection. When you've got a VIX under 11 and you're trading in the 10s after we were stuck in that range from 12 to 14 for months and months, and now here we are in the 10s, those options are really, really cheap, not just to protect, but if you want to speculate to the upside, and I think that's why we're seeing so much of that.